Is Microsoft a good starting point for investing in cybersecurity? Yes, all the hyperscalers are where everybody should start their cybersecurity investing journey because the cybersecurity pure plays have a lot of moving parts that you have to manage. Microsoft, especially with that claim, 37 billion in fiscal 2025 revenue, they're the biggest in the world. The other hyperscalers don't break out specific revenue for cybersecurity, but Google, after they complete the acquisition of Wiz, probably within the next couple of quarters, it looks like that's moving along quite well, probably going to be in contention in the not too distant future as one of the biggest. Amazon AWS, even Oracle has a lot of cybersecurity. They provide identity management software, data security, data backup, a lot of stuff built into those hyperscalers. So this is where you want to start.
What are the advantages of pure play cybersecurity companies versus Microsoft?
So the main primary advantage for cybersecurity pure plays is they provide better, more robust cybersecurity. That's the first benefit. Look at CrowdStrike. That was their real claim to fame. They've also turned themselves into a platform, but the initial move fast model that got them to where they were was endpoint security. They were able to go out there and gobble up tons of market share against Microsoft Defender, which is Microsoft's built-in product that is prone to lots of not so fantastic outcomes. So if you're a big organization and you want to take data security seriously, and you don't think cyber insurance is good enough protection, like I'll live with the data breach and we'll just have the insurance cover the cost while you still had a data breach. You bought insurance. Maybe that's not good enough. It shouldn't be good enough. You just want to prevent it outright. You go and get a really robust cybersecurity product from somebody that is solely focused on that. And that's not just a cybersecurity thing. That tends to be the case for all software companies. When they're competing against the really big hyperscalers, their primary means of competitive advantage tends to be better product, keeping up with trends more quickly, moving fast, because it's the one and only thing that they do, versus the hyperscalers, which are very broadly diversified, not just in software product breadth, but also with the vertical integration thing, managing infrastructure and all that. So, yeah.
What are the long-term implications of AI, especially agents, on cybersecurity, and which companies are the leaders in regards to AI agent security?
Mm-hmm. There's a lot of implications for this. There's going to be a lot of new AI native startups that are developing from scratch, utilizing new accelerated computing infrastructure that maybe have AI agents from the beginning to help automate security workflows for security teams. And so this is why companies like Palo Alto Networks keep making acquisitions versus someone like Fortinet, who tends to go more the organic development route. They're much pickier with their acquisitions. They'll wait for a great deal, tends to be small tuck-in acquisitions. Even CrowdStrike, also another highly acquisitive business. So with all this new AI stuff happening, it's going to set off a new round of probably acquisitions that need to happen for these companies to just continuously keep up and add those new features into their platform.
Okay, so we talked about the hyperscalers being a great place to start. Let's look at a few more companies here. Diversified big tech cybersecurity. So Arista, maybe you haven't thought about Broadcom as being a cybersecurity provider, but they have the tech involved with that. ServiceNow, just dipping their toes in the water, getting involved in cybersecurity. Akamai and Cisco, large older businesses.
And the reason we have these here is all of them have made cybersecurity a large portion of their business. So Akamai, the old content delivery network, competes with Cloudflare. They also have cloud service as well, and cybersecurity, lots of acquisitions. Cisco has made cybersecurity a top part of their acquisition targets, including Splunk a couple of years ago. Broadcom bought Symantec. Arista has some cybersecurity. They also bought the SASE business from VMware, from Broadcom late last year. This is another option after the hyperscalers. Companies that are building a platform type of business or have lots of breadth and depth to what they offer. And cybersecurity is just one of the things that they offer their customers, either as part of the final service that they provide or as some sort of standalone option.
And here's these companies broken down by market cap. Broadcom in this category of 5 is by far and away the biggest. And Akamai, the little baby market cap. Let's take a look at their total return.
Total mixed bag here. Broadcom getting the semiconductor industry bump. Arista Networks as well. Similar story.
We know what happened to Now.
Yeah, ServiceNow. Akamai, interesting here, starting to heat back up again as of late. That's not one that we cover very extensively, but we did have the write-up on it a while back. The content delivery network, CDN, Cloudflare is a tough business, tough market. And Cloudflare really demonstrated how to make a really good go at that. They basically turned that CDN as a very small core service with a lot of other ancillary services surrounding that. Developer tools and cybersecurity, to the point that that's why we don't have Cloudflare in this group anymore. We decided to move them over to the cybersecurity pure play company. A lot of what Cloudflare does is securely delivering content to the right place on the internet and via the cloud. So how do we know who's going to survive and who's not? And more importantly than just survive, who's going to thrive? Who's going to continue to grow their business, grow per share profitability going forward in this new era of AI disruption? Let's go back to our investment thesis checklist. We'll start with the high level stuff, qualitative metrics and quantitative metrics. The two most important things for us when we're doing analysis on this is focusing on secular trends, which of course cybersecurity is. So most companies will check those two boxes, but if you extend the qualitative metric down to the quantitative metric, revenue, this is a really great way to qualify software businesses, cybersecurity businesses, as those that are just going to maybe survive versus those that are in a good position to do well over the course of the next couple of years. Who's currently growing their revenue at industry average or better?
We went ahead and created a little software checklist for you because there's a lot going on in software right now and not for the good. So this is the question: how can we determine which of these companies can continue? So we have some qualitative metrics and quantitative metrics on this as well. If we go back to those hierarchy charts, what is their control over the distribution and integration of services?
For a lot of software companies, the answer is no control whatsoever over the distribution and integration of their product, depth of the supply chain, and control over the development of their technology. For a lot of software companies, yeah, okay, they have control over that. Maybe you find a company that's a leader in a specific software product type. Maybe eventually in the next few years, we're actually going to have some new AI native software companies that have IPOs. And some of those are going to be leaders. As soon as this year, we're going to have companies like Databricks possibly having an IPO. Definitely control over the development of their technology. But is it going to be a great long-term investment, even for AI native businesses? What about the vertical integration and control over that distribution and integration on the higher levels of the value chain?
And then final qualitative metric, breadth of the tech, ability to scale into a platform, either via acquisition or organic development.
Mm-hmm.
Perfect example of that is Palo Alto Networks.
And there's a direct correlation to those three things, especially for a software company. If they're a leader in their tech, but they have limited ability to control their distribution, expanding the breadth and depth of their product, of their technology, so that they become a platform is one way that they can mitigate that risk. For a lot of these companies like Palo Alto Networks, what they're able to do as a result of being a platform is they actually can go directly to customers themselves without relying on those, let's say, Salesforce augmenters, the companies that do integration or managed services. You don't have to sell to them at a discount. You can go directly to the customer yourself, ask them, what do you need from a cybersecurity vendor? They rattle off a list of their needs, and you can say, well, I can cover most, if not all of those. Let's do some vendor consolidation here and save you some money. That is going to be a really important metric for software businesses right now. And there's a direct correlation to those that have truly turned themselves into a platform versus those that sell a point solution and have very quickly been hit quite hard through February and early March 2026. Some of them erasing all of the gains that they've enjoyed the last 3 years or so from this bull market recovery since 2022.
And then if we look at the numbers, the quantitative metrics, what's the revenue model? Is it a subscription-based software as a service versus consumption versus license versus consulting versus professional services? Obviously, there's a lot of different ways that software companies provide services and obtain revenue. So what exactly is that revenue model? And then expense control. This is a really big one with software companies. Stock-based compensation. Is it rising? Is it falling? And you can look at it in absolute dollars, but also percent of revenue. And then finally, capitalization. What are they doing with their cash flow? Do they have debt? And are they issuing new stock or buying back stock?
And on capitalization, just an additional point here, because we have noticed some comments about how to measure a company like Palo Alto Networks. And one comment in particular that I've seen a couple of times now that sticks out to me, the return on invested capital is terrible for a company like Palo Alto Networks. Okay, but return on invested capital is probably not the best metric to use for a company like Palo Alto Networks. You probably want to use something more like return on equity, because Palo Alto Networks has been issuing new stock to pay for some of these acquisitions, which increases the shareholder equity on the balance sheet. And so what kind of return are they getting as the shareholder equity increases? Do you want to use ROIC? Probably not in this case. You might want to do something more like return on assets or return on total assets plus return on equity. So understanding how a software company is growing their business will help you decide how to measure quantitatively how management is building that business.